So the idea really was sparked by observing this phenomenon in the wild. And what we saw, which we thought was differentiated from what the public saw, was that it wasn't just MicroStrategy, right? MicroStrategy is the best known company pursuing this strategy and certainly doing it at the largest scale. And we're very familiar with MicroStrategy. We talk to them regularly, we follow them closely. But I think they're overshadowing the fact that this is a bigger trend. When we looked at this trend, looked past MicroStrategy, we found that there were 70 publicly traded companies at the time that were allocating to Bitcoin on their balance sheet. And we also knew that due to a sort of obscure accounting rule, that number was going to grow substantially. The accounting rule, Charles, as you know, was until the start of this year, companies had to treat Bitcoin as an intangible asset, which meant they would add it to their balance sheet and they could only ever write it down. If the price went down, they had to mark a loss. And if the price went up, they had to sit on their hands. And it was just to try to identify what the actual BTC ownership, and there's all this work. So very simple idea at the surface, but there's a lot of logistics underneath the surface.
Wow, no, that sounds like a very involved process. But as you mentioned, these companies are forward-looking and probably is likely a good step in the right direction. But wanted to maybe take kind of the other side a little bit here and kind of ask you about sort of the skepticism, not just around something like this, but if we were to kind of back it up a little bit, maybe even with Bitcoin and then these companies as a whole. So many people are still skeptical of crypto in general, skeptical about Bitcoin, and maybe even more skeptical about companies like MicroStrategy, now Strategy, because of things like volatility, leverage, and the NAV premium of some of these companies that they trade at. I'm curious what.
They're out to make a quick buck, to capitalize on the excitement surrounding Bitcoin. And the reality is when you sit down and talk to these CEOs, and whether it's Saylor or any of the CEOs of these companies, they're buying Bitcoin for a variety of different fundamental reasons. Many of them have large amounts of cash on their balance sheet, and they've looked at the US dollar, which has lost 20% of its value over the last 5 years, and they've decided that that's not a good option. That's a rational decision. It is objectively true that the dollar has lost significant value. It's objectively true that corporations own more cash today than at any point in the history. And you would imagine, just like some individuals want to protect themselves from dollar debasement, so do some companies. So I think there's a fundamental case for it. It also really does. I absolutely think we're going to see sort of a game theory of dominoes falling. And I would argue we already have heard some news. So we saw Abu Dhabi's sovereign wealth fund buy $500 million of Bitcoin. We've seen proposals in other countries. At Bitwise, we've had multiple inquiries from companies that want to get in front of this trend, that are thinking about it. I suspect when we see the Q1 13F filings on Bitcoin ETFs, which are the public filings that people disclose what they hold, we're going to find out that there's at least another country that has done this. The thing you see in the world right now is central banks dramatically increasing their allocation to gold, right? That has been a major theme over the last year. That's a big reason why gold is at all-time highs. The reason they're doing that is that the US has weaponized the dollar, right? We seized Russia's Treasury. Look at the addresses. Anyone can verify that it's there. And I think this would sort of demonstrate to the world that that's an important feature. People think of that as almost an ancillary feature of Bitcoin, but you don't need to trust. You can just verify element of Bitcoin is really an important thing. So I do think on the margin it would accelerate people. I think more likely is we find out the gold is there and we decide to sell 10% of it to make sure that we're evenly matched between the existing Bitcoin market and the existing gold market. Again, I think it's irresponsible at this point, if you consider holding a hard asset to be an important thing for a central bank to do. I think it's irresponsible to have 0% exposure to Bitcoin. It's an active short bet on this market. That said, I was expecting more out of the Ethereum ETFs. I think the challenge really is that Ethereum itself has been in a rut. right? Ethereum sort of had middle child syndrome. It was stuck between Bitcoin on one end and Solana on the other end. It may be monetized too early, focused on fundamentals, and then faced cannibalization from layer twos. It sort of fell into a narrative rut. And even though I think it's rounding, I think it's on the ascent. I think the narrative story behind Ethereum is improving, and I suspect it will do okay in the second half of the year. The launch really coincided with it facing this narrative challenge of Solana on the one hand, L2 cannibalization on the other hand, falling revenue and fees, and it didn't have a counter narrative to pick that back up. So to some degree, it was this Matt Hougan versus Usain Bolt comparison, and then to some degree, it launched at a paired, of course, with its high throughput and high quality tech and the long term story of Solana. But really, it was that meme coin activity that drove the user statistics on Solana. That's now tapering off. And so the question is, will Solana pick back up with more institutional DeFi-like uses? If we start to see sort of fundamental user growth on Solana in non-meme coin activity at the same time as the ETF launch, I think it'll do exceptionally well because it's a great technological story. It's got great leadership. It's got great thought leaders in the space, both the Solana Foundation and then folks like Multicoin and other that make the thesis extremely clear to people. So I think if it finds this sort of narrative second wave, it will do well. If it doesn't, I think it could see more debt all the time, right? We have $37 trillion in debt. We have a $2+ trillion annual deficit. And that means that people need to loan the US money. Historically, the people who primarily loaned the US money were foreigners, at least for the last 20 years, right? China was a massive buyer of US treasuries. Other countries were massive buyers of US treasuries, but that started to fall substantially. One catalyst was the US seizing Russia's treasury assets, which told foreign nations that aren't our explicit allies that there's risk in buying US treasuries. You don't want to buy something if the US might effectively just cancel it because of geopolitical reasons. So the US faces this challenge, which is we have $37 trillion of debt. We periodically have to refund a region with difficult financial infrastructure. We complain about the financial infrastructure here in the US, but try to do a cross-border payment in South America, in sub-Saharan Africa, in parts of Asia. The costs are extraordinarily high. If you're in one of those countries, you can now buy a stable coin to prevent your money being in the local currency, which might be debased, or to conduct transactions on US quality financial rails. And there are a lot of people globally, right? There's another 8 billion people. So what stablecoins do is they open up demand for those dollars from all those retail consumers and businesses everywhere outside of the US that's never been able to access our market. And you've already seen it grow. Already today, stablecoins are about the 7th or 8th largest purchaser of US treasuries. And that's before we have good regulation. About what that means, it gives a lot of faith in the underlying technology, right? I like to give the example actually of digital art because it's something that people find funny. You guys probably remember when Sotheby's had that art auction and the Beeple artwork sold for $66 million and people lost their mind. Like, who is this goofy juvenile artist that is now the second most highly paid living artist in the world? Whatever. Art's crazy. Someone paid $50,000 for a banana duct tape to a door, right? I'm not going to judge what people are willing to pay for art. What was interesting there is why was it the first digital art auction, right? We've been doing digital art for 50 years. Andy Warhol did digital art in the 70s. Why had no one auctioned digital art ever? And the reason is, until you have a blockchain, how do you prove that you own it? A digital item is just a string of letters and numbers. You can create an infinite number of copies. Technology was cheaper, it was more efficient, and it was more tax efficient, and it opened up new use cases. The answer to your question is, when you look at crypto at its core, what does it do? It creates digital property rights. It allows money to move at the speed of light with effectively no costs. It allows property to move at the speed of light with effectively no costs. and it lets you program money the same way you would program words or video or any software-based code. So the reason crypto will win in the long term is that the world is on this arc towards things that are more digital, and it's on this arc to things that are more efficient. And more efficient, digital, faster always wins at the end. It doesn't matter how skeptical people are. It doesn't even really matter the regulatory constraints. In the end, cheaper, faster, digital difference in the world in terms of the scale of opportunities you can get, particularly early in your career. I was involved in biotech early in the days of biotech, and then ETFs, and now in crypto. And it's just such a difference being involved in a fast growing industry versus a industry growing a few percent a year. So the first thing I would say is do it. In terms of, where to focus, I think finding a high quality company in the space with high quality leadership is probably the most important thing. If you're early in your career, you're going to learn work habits, you're going to learn ways of thinking, you're going to learn mental models. So find someone you really trust and respect at a company that has been around for maybe at least through the last crypto winter, and so is likely not to, disappear, and latch yourself onto them. The other thing I would say, and this is just my personal predilection, is I find jobs where you have to write or articulate things enormously valuable. Now, I'm not a coder, so that's a whole different side of the spectrum. But financial advisors, family offices, each of which moves to a slightly different cadence. And so at the same time that, let's say, retail would naturally pull back and sell, you have people investing in their retirement accounts that buy each month. At the same time that maybe that's not enough to keep up, you have corporations or governments coming in and buying. It's just going to smooth things out. Now, it's not going to be up only. I'm not saying that. It's not going to be like investing in short-term treasuries. It's still going to be volatile, but it's going to be less volatile than it was in the past. And I'm not even sure we're going to see the same sort of 4-year cycle trend on an ongoing basis. I think it might look different than that, particularly for the next few years as these institutions really come into the space. As an entrepreneur, I think it's one of the most exciting places. It has this really unique thing, which is, that there's a mismatch between how much time we spend talking about Bitcoin versus how big it is in the market. We talk a lot about Bitcoin, but I'm not sure we talk about it 2/3 of the time, right? We talk about ETH, we talk about Solana, we talk about DeFi, we talk about DePIN. I think we underweight the importance of Bitcoin, and very few people are talking about this income thing. I think there are going to be multiple unicorn companies built helping people generate yield on Bitcoin, particularly if you think Bitcoin is going where I think it's going, which is there are going to be a lot more people who have substantial wealth in Bitcoin. They're not going to be comfortable with 0%. They're going to want to do something with it. So I think it's going to be a huge place of innovation over the next few years.
Yeah, thank you for that. And just to wrap it up, we wanted to get a few things that you currently are listening.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.